Hello traders, hope you're having a good trading week. For this video, I'll be focusing on the US and Australian dollar. There's some interesting price action setting up with potential for PCE to solidify the signals. Let's dive in. Starting with dollar Swiss, it's been consolidating heavily over the past month after a recovery move off the July lows, and we've been seeing a reaction to this big psychological 0.80 handle over the past week, and price action is starting to look constructive once again. We see 7980 as the risk level to the downside, and a clearance above 0.8040 should start to shift the price action bias to the upside. Dollar yen, we still like this pair on dips despite the market continuing to be aggressive on rate cutting expectations. But if US data over the next week supports our observations and view that the economy is doing much better than what was implied by the July jobs report, for example, then we should see the stronger data make an impact on near-term policy decisions and take more precedence over the longer-term narrative of Fed independence being undermined. And while we're on the topic of NFP, we think the week's jobs report are more a reflection of structural changes in the economy than it is actual weakness. Dropping down to the 4-hour chart, we can see that the 147 handle and below has been very well supported, and considering how aggressive rate cut expectations have been getting, I think that goes to show how resilient dollar yen actually is. As long as dollar yen holds the 147.15 area, I would lean on the bullish side for this pair, and should PCE come in strong, I think dollar yen could shoot for the pre-Jackson Hole levels in the 148s. Taking a look at how risk assets are trading, it's interesting to note that the equal weighted indices are negative while the cap weighted SPX and NDX is trading positive, giving some indication of narrower breadth. But overall, US stocks is looking fairly robust with growth in larger caps being favored again. What I do want to point out is that the global risk complex is looking a little shaky. Asian equities haven't made much headway, while Europe is looking fairly heavy, which you could argue makes a little bit of sense given tariff impacts on global trade as well as geopolitical tensions heating up slightly, with India siding with Russia and China, and Russia not appearing to be interested in peace despite saying so. So with that shaky risk picture in mind, Aussie price action is starting to look rather interesting. The G10 Aussie index has put in a third touch reversal bar today, suggesting that we may soon see a trend change lower. Dropping down to the lower timeframes, we can also see a similar type of signal with this pivot off this rising trend line, and should we start to put in a lower low and close, we could be seeing this rising wedge-like structure resolve to the downside. Aussie New Zealand, it's put in a daily reversal bar yesterday with bearish divergence, and has continued to trade lower today, giving some confirmation to that reversal bar. As we are quite focused on long dollar trades at the moment, Aussie New Zealand could be another way of expressing the short Aussie trade as a non-correlated trade position. EURAUD, it's put in a nice bounce today with a nicely placed wick off these support levels around 1.7830, and the 4-hour chart is showing a bit of potential with a break to the upside. This pair could be a nice way to avoid some of the dollar's US political risk, which, if you may have noticed, EURUSD has been trading a little bit like a US political risk proxy. That's all for today's price action report. If you found this insightful and interested in seeing more content from us, please give this a like and subscribe to the channel. And if you're a serious trader that's interested in joining a private group of experienced traders, check out the link in the video description. Thanks for watching and good luck trading.